The reason for the general meeting today, or the focus of the general meeting today, is really talking about one of the biggest things that we actually have in the industry for efficiency basis, which is cost, okay? And what we can actually do to achieve a much more streamlined approach to that cost lever that we actually have across all of our operations and technologies. I think the other thing which is clear, is changes in technology that we're seeing in this generation now is going to impact us big time as we go forward over the next few years. In fact, I saw a report this morning that's saying the move to AI, for example, will actually have a detrimental effect on the number of people that are employed in the industry as we go forward. Now, obviously, they may be deployed somewhere else in other parts of the industry, as we have done for the last hundreds of years, but certainly that's going to have a big impact on it. I think the other change that we actually see is the way in which the model of the industry is actually shifting as well, okay? And you will see that as we go forward. In the AGM next year, we actually want to have a session on the change of the model for the financial industry, okay? I'm personally been driving a lot of the discussion around the fact that we try to actually automate the silos within our industries, whether it be at the participant level or actually functional level, but we don't have a plan for the big picture in terms of what's going on in the next few years. There won't be one plan, I'm sure, but there will be 2, 3, maybe 4 or 5 that we actually have to consider as we move forward. But I think it's about time that the industry actually got together to actually talk about that. So the couple of updates that I personally have is that the actual group itself has been very active in participating in some of the industry dialogue that's been going on around technology and operations and indeed regulation. We've got Tony that's been running the regulatory group, which is actually fantastic. If you've never dialed into one of his calls, you're missing a trick there, because there's a lot of discussion and debate about how that regulation will impact you and how we can have some kind of relevance for our industry and how we can actually maybe have some input into that as well. Gary's group on the DLT is also very active, and obviously we've had work very much so in the last 2.5 years now in the DLT area, and it's actually coming to quite a peak at the moment, I would suggest. And Gary and Tony would like to have a chat with you later on as we close the conference today, so they can give you an update on where they are, what they're going to be doing, and what they're going to be doing next. Okay, so that'd be a great opportunity for you guys. Ourselves, as a group, we've actually participated in the ECP DLT for T2S, so a lot of 3-letter acronyms there, but it certainly was a group that we were introduced to look at the impact on the distributed ledger technology on the T2S environment. And Gary, I'm sure that you agree, it was quite an eye-opener for us in that, of course, they're very structured in terms of what they're looking at, but they've missed a lot of the bigger picture, which is the reason why it's not their fault, but it's a reason why I think that there's an opportunity for us as a group to actually engage with the industry to actually make a larger picture. And I would love to see anyone in this room and outside to participate in that discussion as well. And of course, we've got George on stage here, who'll be in the panel session later on. The lady and gentleman at the back are doing the taping for us. That's the partnership that we have with CISI, okay? Now, that's a great opportunity for us, and we've been talking to George for some time about how we can actually make that even tighter, and I'm sure that George will update us on where we are in his panel session later on. The big one for me is that this is a setup for us for the AGM in January. It's January 25th, 2018. It's the same location as we were last year, the Hilton at the Tower Bridge. Great location, and it's free, okay? As a group, we like to have this as free. The reason why, Siri, the reason why we like to have it in a shared environment like today, City is very kind enough to actually allow us to have this for free, well, obviously internal cost, but free for us to actually host this meeting today. And we'd like to have anyone else extend that out to anybody else who can offer those facilities that, 50, 60, 70 people that we can actually have. The one in January, we're looking for some kind of sponsorship. We're actually moving more into a digital sponsorship agreements now with potential sponsors. And if you're interested in that, Rob's actually running with that as we speak. As I said before, the theme is going to be the new industry model. I really do believe that we actually have time now to actually design that model, and hopefully we'll be talking on the education panel partnership there about how we can actually use some of those untapped resources to actually describe that. Okay, so just a brief update, but I just wanted to make sure that everyone's aware of what we're doing. And again, this will actually be on our on our website afterwards. So if we look at the agenda, clearly we have Steve Samama he's a partner head of capital markets technology at Oliver Wyman. He's going to be talking about the cost transformation, digital architecture, sourcing, and evolution of the operating model, which actually fits in with exactly what we actually want to be talking about today and in January as well. We're going to have a short coffee break, 10 till 10:30. I have to be strict on that 10 till 10:30 because the host of people from Citibank want to go up, they have their coffees and their teas and things like that, so we have to be strict about that. So I'll be relying on my colleagues at the back as well as my own timekeeping as well. Then we have a regulations panel debate headed by Dr. Kirby with Catherine Woodrow, Len Delicate, Simon Andrews and Henry Rational I've seen this morning already. Henry's there down there, yeah. And Henry's an old friend of ISITC from many years actually, so it's 17, there we go. So you're only a youngster then, come on, you're only a youngster. Yeah, so we'll be talking explicitly about MiFID II, which I'm sure everyone's knee-deep in at the moment, and the impact directly on your own businesses and where we're going with that, right? So the status of that. And then I'm looking forward to the academic forum presentation and the panel session that's run by John Gavin. He's going to be talking, introducing Kieran Tran from the University of Birmingham University. My daughter's there actually, so I should get that correct, shouldn't I really? Yeah, so we're looking forward to that discussion. That's where we actually look at some of the research that's going on. And finally, we're going to have the outsourcing panel run by Rob. Again, cost drivers and cost reduction and cost mitigation and risk mitigation is all tied up with outsourcing and where we are with that. Not many people have been talking about outsourcing, if I'm honest, recently, and I understand there are some new reports that will be coming out and hitting the streets very soon on that particular topic. And I think that outsourcing has really taken a different, I think, Rob, you'll agree, it's taken a different phase as well as we move forward from the days in the 90s and the early 2000s. And then really a quick wrap up and close, and I'd like Gary and Tony just spend a couple of minutes on where they are and what they're doing, and maybe John as well, so that because you can do that in your panel session as well. Okay, well, not bad. I actually give you another 5 minutes, actually. So, Steve, I'd like to welcome you to the stage. If you can give us your insights, that'd be fantastic. Thanks very much.
Thank you. Thanks very much. Good morning, ladies and gentlemen. I'm very pleased to be your keynote speaker today. When we were preparing this event with Rob Scott, and we were thinking, okay, the key message is around transformation. And the question is how to demonstrate that the banks need to transform. So the way I'm going to provide this is to go through some illustration of megatrends. And you will see that through the megatrends, there is a rationale for this transformation. So the question is really, what means transformation? And if you look at the conclusion, let's give the conclusion first. The transformation towards a modular, open, connected, agile architecture and operating model is a must. Yeah? So let me repeat that. Obviously, I don't have slides, so I want to ensure that everyone is getting. The transformation toward a modular, open, connected architecture and operating model is a must. And you can see that if you look at what has been done since so many years, a lot of the industries have been through transformational change or changes, which in some cases have not been sustainable, have been shortcut. And I will illustrate some of them. So if you take, for example, outsourcing, it can be transformational, it can be shortcut. If you take the new buzzwords around RPA, it's very short term. So let's explore the context and the different megatrends. So the way we look at how transformation is driving change is to look at the megatrends. And obviously, when you look at the past, it doesn't predict the future, as we know, but it helps to understand what are the trends and why you may think that it's going to continue. So the first one, obviously, which is also a context we are living for so many years, is the increased cost pressure, right? If you look at the cost pressure from whatever is going in the regulation or whatever is going from a productivity gain, the cost pressure is very intense. And even during the different cycle, the cost pressure remains. So this is a pretty big one. The second one where obviously it's impacting everyone and it's forcing and the investment bank to change, but it's also forcing all the different actors to change at a higher speed, is the regulatory intensity. And when you look at all the different regulation that has been put in place for the last decade and what is coming on, there is not only an increase in the cycle of change, but there is even an increase on cost pressure and capital, obviously. The third one is what we see as a shift from globalization to balkanization. Yeah? And you can see that we have been on a move for so many years on globalization. Whatever the different topics you take, international and regulation has been on globalization. But we see a shift now to balkanization. Trump, Brexit, and I know that we are going certainly to discuss that in the panel. Brexit is going to have a major impact, certainly, on balkanization, which means not only being compliant on a global basis, but being able to be agile and adapt to your specific local regulation. The next one, which obviously everyone is currently working on, is the point around leveraging technology, digital innovation as a key enabler. Yeah? But the question is, which technology are really sustainable? So we are going to explore that. The next one, and you see some technology which is helping this, it's around sharing and collaboration. There is a need, there is a will from everyone, from the different participants, from the different banks, to collaborate and work together to solve the issue that the market is facing. And obviously blockchain is a very good example of that. We'll explore that. The next one, as a mega trend we are seeing, is distribution versus production. Yeah? There is product factory and there is distribution. And there is a clear trend of decoupling distribution and production. We'll explore this one too. Next one, which is obviously coming as an impact, as a side effect of distribution and production, is client centricity. And obviously digital technology is helping a lot on being focused on client and delivering new services. So what we are seeing as a shift is selling products, which obviously was a key point. So from selling products to selling services, client centricity and selling services. Obviously, with all the pace of change, if you are not agile, if you are not on time to market, whatever the good ideas you are too late. So that's a mega trend. That's obviously why you see some DevOps and whatever different way of working and collaboration, trying to solve the issue very quickly. Another one, which is not new, but the cyber risk is obviously something as a key consideration. And the last one, which is very much something which is starting to emerge in some of my clients, is IT as a value creator. So if you look at IT, it has been for many years mainly a cost center. The question is, with digital technology, with all these changes, is IT being able to capture the value creation? So let's explore some of this. Obviously, I'm not going to spend a lot of time on the context and what we are facing, but it's not new. Yeah? The low interest rate, low margin, no volume, capital pressure, all the context for cost pressure, which is going intensively. But you have also the impact of regulation where the commoditization of products, the commoditization of processes, and even the impact of regulation from OTC to OTC clearing is putting even more pressure on the cost base. So it's not just the impact of the regulation like FRTB or Basel or MiFID, or BCBS, but it's also the point that, like I say, the globalization and balkanization, moving to a balkanization, is going to put even more pressure on the way that you need to adapt to your local regulatory constraints. So this is driving, obviously, cost reduction and productivity gain a lot. What have we seen? For so many years, in fact, we have seen banks trying to catch up with this cost pressure. And a lot of these banks have been through a lot of different initiatives. And you can name a lot. I'm not going to explore all of them, but if you look at labor arbitrage, near offshoring, if you look at outsourcing, and outsourcing, there are many different ways to do it. IT outsourcing, business process outsourcing, combined with the managed services, transformational or whatsoever, you see that a lot of initiatives have not delivered the expected outcome. And therefore, banks, in a way, have tried to transform, but not really take the pain of doing the transformation, not really being sustainable on the effort to transform. And therefore, you have a tendency to take what is easy to implement, what is easy to provide some cost saving and productivity gain. And what do we see today? We see the buzzword on RPA, because obviously RPA, and this is one we are going to explore, RPA is easy, but doesn't deliver really the sustainable change that you need. So that's the context. And I think if you look at the budget, change the bank and run the bank, most of the time you will see that the change the bank budget is around 40%. Out of this 40%, if you take from the 100%, the change the bank budget for regulatory change is around 20%. Some banks will argue, but I'm transforming my architecture while being compliant for the regulation. And that's right. Some of our clients are doing FRTB changes and being transformational, because this is typically a regulation where you need to have really to fix it from a structured manner. But most of the regulations that are currently undertaken are not being done from a long-term view. And therefore, the 20% is not transformational, exception with some of the banks with FRTB. 40% on change the bank, 20% on regulatory change, 10% on tactical changes, in fact, 10% on structural changes. So even if you, let's say that 10%, which is big, of your 20% of regulatory changes are structural changes, transformational changes, at a maximum you have a 20% budget on transformation. Not big. It's not going to disrupt anything with a 20%. So there is a case here, and that's why I think the industry is very much facing how to transform themselves while managing the cost pressure and finding a way to be time to market. And that's not easy. Let's go through some of the mega trends. So labor arbitrage is one. Obviously, everyone has been through, I guess everyone, has been through the near offshoring labor arbitrage. Most of you will have certainly a piece of outsourcing for corporate action, for middle, back office, for integrated front to back, whatever the different situation. Some are thinking that mutualization is the next wave. And we have made a report on that. We have made a survey. The expectation on mutualization is very, very high, very high. But it's not the only landing point. The point is really, can we have the industry solve the issue for us? Can we have utilities emerging? And true utilities. Let's not use the utilities as overused word. Utilities as non-profit organization. So to your point, is there a way that the industry is going to solve the issue for the different participants? So as let's see. We have done an outsourcing survey. We are going to publish that during Cybos. Let's see some of the question and how the audience is reacting to the same question. So raise your hand. How many of you, of your organization, have already a near offshore center? Not everyone. I was maybe not clear. How many have already in the investment bank, in your bank, a nearshore offshore center as a labor arbitrage? Raise your hand. Wow. I was expecting everyone. So that's not already the case.
Not all the banks, right? So we're a very broad church
Okay.
here. So
Okay.
you do have consultancy as technology.
Oh, okay.
Right? So it's kind of...
So I need to consider the bank participant.
Hold your hand up if you're a bank.
If you are a bank, please, if you are a bank, raise your hand, near offshoring. If you are a bank and you don't have a near offshoring, please raise your hand, because that's, in fact, so that's the point. Everyone has already done this. Yeah, it's obvious. But this is not transformational. This is sustainable, but not transformational. Take outsourcing.
Sorry, could you just clarify between nearshore and offshore? I mean, I'm HSBC, we've got most of our offshore operations in Southeast Asia.
Yes.
But we've got something in Poland as well.
Yes. That will, Poland will be nearshore. So HSBC, obviously, you have operation in Asia, and you will not consider Asia as your nearshore, but Poland will be a nearshore for your European center. India will be your offshore for your operation, right? Yeah, and you have that, of course. Everyone has that. Outsourcing, raise your hand again if you are a bank and you have some of your operation being currently outsourced. Currently outsourced. Some of your operation could be corporate actions, could be some settlement, reconciliation. So that's interesting because we see that almost 50% of the bank in Europe have some kind of outsourcing. And we see that some are looking to outsource in the future should the supplier provide the solution they are looking for. And interestingly, some have very high expectation on what kind of solution they are looking to find, either being mutualization or either being specific or either being able to take over their own capabilities and architecture and people and do that for them. So that's where there is a high expectation to reduce cost, but not yet a very clarified set of supply that match the different demand. Next one, when you think about outsourcing, how many think about this will help to reduce cost, obviously, but more important, to avoid the cost in the future? So cost avoidance of future investment. How many think it's more important, not just cost reduction, but cost avoidance? Raise your hand. And that's the point.
So the argument is for fixed costs into variable costs, that kind of model, so you can actually reduce your fixed costs in the future, or avoidance of regulatory change, for example, in a specific area?
It's exactly both, because the issue that we are seeing is that in most cases when you outsource, sometimes it's not going to be variable cost. It's going to be variable at some margin. But if you are not thinking of outsourcing as a transformational way, it's going to transform your potential variable cost because you are able to work on your base and to make and change to a fixed cost because it's going to be fixed, even if there is some variability on services. And to your point is also, of course, to avoid the future costs of regulation impact as a key example. And therefore you can see that the demand, the expectation is so high that it's very hard for any provider to be matching everything. Yeah? So the transformational outsourcing is very complex. And that's certainly one of the highest expectation we can see. Let's continue. Productivity gain. When I was preparing this, I was thinking, okay, let's put that in some context. Let's think about productivity gain from the last 20 years. I remember when STP was the buzzword. I like to think about buzzword. STP was one, right? Everyone is smiling because you remember what it means. Then we saw the workflow event processing, event exception handling. That was very successful. That was very much sustainable. And most of the applications we have today are still on that base. Yeah? Very successful. The next buzzwords, I remember in my career, I almost jump on this one, process simulation. That was great, but didn't solve anything. Yeah? That was great to understand. That was great to potentially simulate what it would be, but we didn't have the solution. Guess what? The next buzzword that came was Lean Six Sigma. And at a point, if you are not a black belt, you are nothing. Yeah? This hype is totally gone, which is a shame because obviously that was really the technique to re-engineer your processes and to make a transformational change, a structural change. But what I see as a positive side effect of Lean Six Sigma is that people understood that if they work differently, if they collaborate differently together from the inception, they could achieve something different. Guess what? DevOps is working like this. And everyone is working on DevOps because of specifically understanding that you can achieve much more if everyone collaborates end-to-end. Next one, RPA, which is the most interesting short-term kind of unsustainable technology. Yeah, I'm going to give some highlight on this one. I think process digitization is a very interesting one, which is starting to emerge, starting to combine different technology, different digital technology, and starting to certainly pack everything I was mentioning: process simulation, Lean Six Sigma, RPA, machine learning, analytics, combining digital technology to find a new way of looking at different processes. Looking forward, process collaboration. Can it be a way of managing your processes differently? That would be something of interest. Let me focus now on RPA, because I think the demonstration I'm trying to make here is there is a lot of different levels, and some are just trap. And I think that RPA is very interesting, but looks like a trap. Let me explore why. So obviously, I like RPA because it's a very quick return on investment. It's very easy to implement. Everyone will tell you that in, let's say, 4 weeks, 6 weeks, 8 weeks maximum. If it's more than 8 weeks, it's not suitable for RPA, by the way. And it provides, in fact, very insightful analytics on your processes. You can even better understand your processes and fix some of the issues that you may have on one given node if you have this analytics from the RPA. So that's everything which is quite interesting and good. However, it also brings a lot of issues. If you look at the main issue that we are currently seeing on the market, the expectation on the business case is totally wrong. Meaning, whatever who has said that, being the software, being the service company, or whoever, the expectation to have 50, 60, 80% cost saving, just totally wrong. The expectation to have, even if you are not thinking about 50%, but let's say 20, 30% cost saving on a given base in your operation. Yeah? So take a middle back office, take a back office operation, custody, clearing, back office investment management, whatever. If you think that you can achieve 20, 30%, you put your expectation far too high. Why? The main issue with RPA, specifically in our industry, that is going to work on the last mile, which has not been automated yet, right? And we are not an industry where STP has not been there for years. So I see in some industries, and typically in some emerging markets, where the size of the base where an RPA is going to be implemented is huge. And as a consequence, you have the critical size so that you can achieve a very nice cost saving. In our industry, even in some emerging market in capital markets, STP is so far being implemented that most of the time you will have implemented RPA for 5 to 10 people FTE, yeah, kind of size where you can apply, and most of the time even 5. So it means that you are going to work on fragmented tasks where being able to aggregate back the FTE reduction to a one given people is not that easy. And let me understand how out of a team of 5 people, how can you do a cost saving of 3 if it's not going to be transformational? But more important, so that's not the only issue. The more important point around the RPA is the technology itself and the way it is implemented. If you look at each boat has a lot of different interfaces, but it's point-to-point interfaces. And I call them filament. Yeah? The very thin interfaces, point-to-point. And if you say that each boat has like let's say 5 to 10 filament, and you want to implement 500 boats on your 500 application or 1,000 application, can you imagine the net of filament you are putting on your system? That will create not only an issue to transform your architecture, but even to ensure that whatever is going to change is going to be managed. Specifically, if you look at the technology of RPA and the screen scrapping, this is obviously not sustainable. Any change on screen is going to require some maintenance. So the cost saving The talent transformation that you need to have to ensure that your operation people can change or can adapt some of it while respecting the compliance between the role of IT and ops, you know, all the things, it's very hard to understand. So the point is, RPA obviously is short term, but more important, it's not sustainable, and even worse, provide a weakness from a resilience perspective on your IT. Resilience is one of the key words I start to use when I try to assess, is this strategy, is this transformation sustainable but resilient? And resilience means being able, of course, to manage shocks, whatever the shocks. And typically here, RPA, if you really want to be resilient, you need to have some fallback solution, potentially with people managing if the bot is not working, which obviously destroy the business case. So that's an illustration. But now, having said that, and again, please raise your hand if you are a bank. How many have an RPA program? Almost everyone, of course, of course. How can you avoid to not do the cost saving? How many have already implemented 50 bots in their organization? Not so much, not so much. Almost 30, 20. 30, okay. So the industry, and this is quite common. The most advanced one will have 30, 50 bots, 100 as a maximum. But the expectation is to have around 300 to 500. Yeah? So think back of what I was just mentioning. So I'm not saying that you should not use RPA, because obviously cost pressure is so high, you need to find a way to generate some budget. And the cost saving that you can generate with RPA, if you invest that on structural change, that's great. If you combine RPA with other technology like doing process digitization, that's fine too. I'm pretty convinced that RPA will certainly be, you will certainly have RPA.2, 2.0 or 3.0. What do I mean here? The issue with the sustainability or the resilience is coming from the way that RPA is working. I'm pretty convinced that everything from a screen scrapping is going to become very structural from a database perspective, so that it's not going to be so weak, let's say. So if you have that kind of change, then RPA will become like any other techniques to exchange interfaces in a structured manner. Let's continue with my final design. Yeah? Good. Halfway, good. Next one, leveraging technology, digital innovation as a key enabler. That's again some of the buzzwords where we need to be very careful. The first point, obviously, we have seen, depending on the size of the different banks, we have seen a shift from build, from an IT perspective, to buy, or combination, right? And this has been for many years. And in the meantime, we have seen the emergence of cloud. I'm going to provide also some highlights there. But what I see today, what we are thinking that our clients are moving to, is obviously from this build and buy to consume. Yeah? Yes, consume. So what does it mean? You will consume services. And cloud is exactly this. If you really implement cloud, which is infrastructure as a service, platform as a service, software as a service, you are going to consume services. You are going to consume services that your own IT department is going to build, and you are going to integrate, assemble the different components of services, but you are going to use the different components and consume the services from the others. An API is typically the buzzword illustrating this. Yeah? So it's not yet mature, and again, I'm sure you are thinking about how to structure the API from whatever the standard.
But I agree. I mean, API has been around for many, many, many years, right? But I'd be interested to hear what you say about DLT, how you see that interoperability move, right? Because you can have native into native, or you can have, like you've been doing for the last 25 years, a bit of middleware that actually converts anything to anything, right? So I'd be interested to see what your view is on that.
Yeah. So let me just, before I say a word on blockchain, which I think it's, by the way, the only technology that is going to disrupt the current situation, I think. And it's more the concept, in fact, that blockchain itself. So it's more the concept of DLT, whatever the technology behind this, rather than blockchain itself. But if you take, again, shared environment, shared database, shared infrastructure with the cloud, shared application, and we see some of this emerging as services like KYC. You have some shared application. And shared services, not shared services as an operating model, shared services as services that you are going to consume from over. This is obviously an emerging trend. So typically on blockchain here, I think it's a great concept. It forces, and because people love to innovate, it forces people to collaborate and find solution or try to solve some solution looking at how to implement innovation. And I think blockchain obviously is certainly the only one disruptive technology, or at least concept, that will change our industry. However, the current situation is not yet providing, it will be very interesting to hear your point of view, but it's not yet providing neither the technology or the cases where it's going to disrupt. It's going to have some structural change in some cases, very narrow in some limited processes or set of processes at a given point, but not yet as a disruptive transformational change. All the pilot or proof concept I have seen so far, and obviously maybe I didn't see everything, but when I discuss with the people who have done it, the first question is, could you have done it differently with different technology? The answer was yes, obviously, because you have all different techniques for doing exactly the same. Even worse, is blockchain the right technology? And should you have done the same pilot and POC with the other technology? Would it have been more sustainable? The answer is yes. So obviously, they use blockchain as a way to demonstrate innovation, that they master this new wave. But I believe on blockchain 2.0, 3.0, whenever it will come, or maybe DLT technology. But you need also to have a shift, typically from regulation, where the regulators will agree to collapse some of the value chain, some of the players in the value chain. I don't see that for tomorrow, but unless you have that, it will be certainly impacting some of the processes, some of the value chain, but it will not be disruptive to really change from sales trading to whatever the processes until custodian, the value chain. We are running CIO benchmarking. In the next 3 years, we have 70% going to be on cloud. 70% of the application architecture, being front, middle, back office, whatsoever, they expect to be moving on cloud. Now, cloud again means a lot of different things. You can move your application on cloud. It's like you have currently a data center and you move to a cloud. So what? It doesn't bring so much. You have some scalability or you have some flexibility or variability on your cost, but that's not transformational. The point is, and it's unclear out of the 70% how much will be transformational, but the point is, the one who are going to get the benefits of cloud is around the one who are going to cut the different layers from the infrastructure, from the platform, from the software as an application, so that you really manage the different benefits of the cloud. And this is typically where we see the trend going on also, because if I remember in my career, this client server and 2-tier and 3-tier, this is just the N-tier technology. So why do I insist on this point? It's that with everything I have just said until now, and I'm going to illustrate more trends, you can see that there is a need for this modular architecture, but not just modular architecture from a functional perspective, but modular architecture from a technical layer. Yeah? Because else you are going to put your application or whatever you have, and that's the issue with retail banking, by the way, with big legacy applications, which obviously they cannot delayer. They are going to put that on cloud, but they don't see the benefits. So you see that the impact of this trend, and if you really want to leverage digital technology, you need to have modular architecture from a functional perspective, but also from a technical layer. And therefore, if you look at some of the things I just highlighted, you have clearly the one of gain kind of buzzword RPA is one of them. Outsourcing, being infrastructure outsourcing, application outsourcing, business process outsourcing without any transformation is obviously here. The labor arbitrage with offshoring or outsourcing without any transformation is there. Similarly with some of the applications if you just move them like this. However, if you look at the processes and process digitization, which is the new wave, combining this Lean Six Sigma kind of approach, but with a quicker return on investment, with a more pragmatic approach. If you take the IT architecture, the talent transformation, or the business alignment, that's the kind of transformation which is providing sustainable change. Let's continue. Distribution versus production. So the industry used to be integrated end-to-end distribution and production. And we have seen some separation between distribution and production in different industries. If you look at wealth management, it is the case for many years, right? But we can see that it's coming and going to impact our industry on the key processes. And if you look at today, regulation like MiFID II and GDPR are certainly setting the stage for that. So what we expect is not only that it's going to have a separation between distribution and production, but we are going to have a many-to-many relation between distribution and production. Yeah? And you can easily understand that with the wealth management, fund management, distribution. But take the research, take the implication of unbundling research with the MiFID II regulation. And what does it mean? What does it mean in terms of cost, as obviously the cost pressure on cash equity is huge? What does it mean for producing this research, and more important, to even distribute this research? Understanding that your client who is going to consume this research, this service, most of them will expect that it needs to be fully integrated in the architecture. Because your client have a multi-dealer relationship. So whatever you provide them, they are expecting you that it will be seamlessly, through API or whatever the technology, integrated in their architecture so that they can fully wrap, manage, analyze, package new services that they sell to their clients, right? So that's also a way to understand the impact. It's not just distribution production, but it's also the way that you are going to provide the information for someone else to wrap your service and deliver added value services. So the expectation on client on what you are going to deliver as a technology is very high. Client centricity obviously has a side effect on not only the digital technology, which is enabling that, but also on this decouple of distribution and production. So we see a shift from product specialization, product expertise, even operational excellence, which needs to be a given. If you don't have the operational excellence, obviously you don't manage correctly your cost. You have any issues to just deliver the standard services. But if you look at the shift towards client centricity and the impact on what it means from a product or from an operational perspective, you need to be able to say that the standard for everyone is operational excellence, and then you are going to deliver more services or additional services. It means you understand your client tier, you understand the kind of premium services you want to deliver to the best customer. It means that you have this kind of KPIs to measure everything, understand which. Where today the industry is facing to be KYC compliant or doing the onboarding in 2 or 3 days, which is obviously not the point. Onboarding should be done. It's not an added services. How can you claim that you are better than your competitors or you have a premium service because you onboard your client in 1 day? That's not the point. So really, with that mindset, from selling product to selling services is the next step. Because if you want to be client-centric, you need to stop selling products and think about selling services. And back again, selling services here as a service that the client will consume. But obviously, you need to have all the technology and capabilities and operation to provide this. And that's back to what kind of change you need to have. And of course, your client is asking the time to market capability because they want that for yesterday. So you need to be agile. Let me finish maybe a little bit in advance. The next one I would like to explore is which is starting to emerge now, on considering that IT is becoming a value creator. When we discussed with Rob, you were telling me certainly banks need to think about themselves as technology companies. Obviously, since I've been in the industry for the last 25 years, and when I look at the number of people the IT department has, for whatever the size of the bank, and obviously some of the tier one have so many people, banks are already tech companies. You may think they need to be more agile, like fintech company with innovation and disruption and be able to manage the ecosystem. Okay, fine. I think the point is, if you look at the really the digital world, why don't you consider IT as a value creator? Why don't you consider that from a cost center mentality, you are going to have IT managed as a profit center? And if you look really, if you think about what IT is delivering, you will certainly see that IT is already providing a lot of indirect revenues, because whenever you have competitive advantage, whenever you have capabilities which are delivering from IT to provide these indirect revenues. Take high-frequency trading. Why do you invest in high-frequency trading if you are not getting some competitive advantage and revenues? So that's typically an illustration of indirect revenues. But I think, and we have some illustration on the industry, the direct revenues of IT is becoming the new way of thinking. So let me give you some example of direct revenue. One which is not sustainable again, asset monetization. You can certainly see a lot of banks who have done a lot of huge development in the past and say, okay, as part of an outsourcing, by the way, why don't I sell my assets, I monetize and lease back this. Yeah? So that's a kind of one-off. But in fact, I think certainly Aladdin from BlackRock is a very good example, right? Having done this huge investment themselves and having packaged this capability and delivering data as software, and by the way, software as a service. And you can see that the demand from the industries is moving towards this new consumption. So back to my point, you are going to consume services, API-driven, why not, or as a service-driven. Collateral management as a service is emerging. Yeah? So this is typically the kind of thinking where IT could be catching up with a value creation mindset and could be seen not just as a cost center, but as a profit center. And therefore, it needs a lot of different changes. It needs change from a mentality, from a governance. Whatever the investment, whatever the initiative you want to do, you obviously need to look at what kind of value it's going to create. And sometimes it doesn't create direct revenues or indirect revenues. It helps to reduce cost, and that's fine. But if you are really looking at, is it going to create some value, you need to have the KPIs, you need to have the governance to manage that. You need to have the operating model too, because obviously to create, deliver, support test services, and to integrate the service in the ecosystem, it's not that easy. So it needs a little bit of change in the operating model, and obviously the talent and capabilities need also to change. So this is a kind of very, and sorry if I've been too much just on the surface of all this point, but this is just a kind of wrap-up of all the different trends we are seeing in the industry, and where if you really take the benefits of this technology and the changes, and you really understand that you need to build something which is sustainable, you will certainly agree with my first statement, which is IT needs to help to transform, obviously, to a modular architecture, open architecture, obviously, connected, and not just from an architecture, but from an operating model, so that it's going to deliver differentiated services from a sustainable manner. Thank you very much.